dig into the data a bit, you begin to see it isn't all what it appears. Things are dropping or starting to drop. So what does that say? Does that say that we've now hit the peak and things are beginning to fall off? Could well be. It's gathering momentum. It's a snowball. These negative percentage are growing and growing and growing. This is only going to grow. So that is concerning. Very, very, very concerning, in fact. Eyes wide open, people. Eyes wide open. Hello, ladies and gentlemen, Greg here from AirDXB to bring you another big short episode. So this one we're going to call it the double downturn of the long-term rentals and resales. So first and foremost, let's talk about the last episode very quickly. 1.2 million views. That is incredible. So thank you to everyone that watched, well, all of our series, but for that growing audience that we are achieving, a big thank you, and please do keep on watching. So look, we're coming up to our 5th episode now. Our first one was back in May, where we highlighted the early signs of slowing sales and rentals softening and the oversupply forming, which we're going to talk about in a minute because that supply is coming in thick and fast. Episode 2, we showed how supply acceleration and heavy off-plan launches confirm those early warnings. Episode 3, we broke down the consequences. Cooling rents, rising defaults, job pressure, and affordability issues, which we're still seeing quite a lot of at the moment. And then, of course, our last episode, we presented the market's breaking point. Is it a breaking point? Well, watch our last episode to find out. So we looked at the values slipping, one bed oversupply, and the secondary sales falling. So today, we're going to bring in even deeper insights across the sales, rentals, supply, handovers, and the macro conditions. So first and foremost, to those welcoming you to The Big Short, or those that have been with us just a bit about it, The Big Short is, the aim of this is to show a different side of what's going on in the market. The market is flooded with all the positivity. Oh, the market is seeing the best quarter in value, the best quarter in transactions, everything's amazing. Just go onto social media, look anywhere, you are getting that information. What I'm trying to do here is just show a different side of it. All the information that I'm going to share is sourced through third parties. I want to make that very, very clear. If it's my opinion, I will voice it. But the reason for the show is to just give that different viewpoint. It's not to do anything other than that. It's just to give two different sides, because if you're considering to buy, which if you want to buy, you should buy. Why wouldn't you want to buy? Whether that's for investment, whether that's you want to live in it, why not? But this just gives you a better understanding of what the market is doing so you can make more informed and better decisions. So that's what we are. That's what The Big Short is. That's what we've come here to do. And I'm going to go forth with our Big Short number 5 and tell you what's going on at the moment, because I know there's a few of you have been messaging in, eagerly awaiting as to what is actually happening. So let's jump into it, shall we? So what I'm going to do is highlight, again, for those that are just joining us, the sources. I'm always going to say what the sources are so you can go and look at this yourself. And please do. Write in the comments if there's anything that you want to hear from us or if there's any questions that you want to ask us. But the sources are there so you can go and look at this information yourself and get a better understanding of it or get your take on it. So the sources for what's the market saying? So we're going to start with that. So the sources are the Cavendish Times. They will look at the Betterhomes Q3 report. There's a bit of Bloomberg here, Financial Times, and the Telegraph. So Cavendish Times reported that the market is losing momentum after record highs. Growth is becoming uneven, and the market is increasingly dependent on off-plan sales. Concerns around oversupply, a potential correction, are now appearing more frequently in the news, and they are. I think it'd be safe to say you're probably seeing at least an article a week talking about the oversupply or the rental correction or whatever else is going on. So if we look at Betterhomes, so according to Betterhomes' Q3 report featured in the Cavendish Times, in contrast, the villa and townhouse segment saw a decline. Villa sales dropped 22% year on year, and off-plan villa transactions fell 69%, reflecting a pause after record-breaking activity in the first half of the year. The CEO there, Louis Harding, he commented, and this is in the Cavendish Times, villas, particularly off-plan villas, are under pressure and may require more calibration between pricing, design, and buyer expectations. So So that's Betterhomes. As we know, they've been here a long time. They have a lot of data. They deal with a lot of properties, have a lot of brokers. So these guys have a great opinion and great oversight of the market. So that's actually coming from the CEO. So Bloomberg and the Financial Times reported rising concerns about sustainability, questioning whether the boom is becoming a bubble. Nearly 250,000 new homes are scheduled to come through by 2027. New developers are entering weekly, and flippers are now struggling to offload off-plan units. Not the first time we've heard that. We've heard people from Property Monitor saying the same as well, that for argument's sake, someone's buying something at 1 million dirhams, they mark the price up by 20%, let's say 1.2, and flip it, sell it on to make themselves a 20% profit margin. That is becoming increasingly harder, to the point that you can no longer do that. Why? Because there is so much stock coming into the market. So if you are unable to do this, then why would you be looking to buy? So the Telegraph, Daily Telegraph, that's based in the UK, reported that Dubai may be repeating a build it and they will come cycle, with prices up 70% since 2019, which is incredible, isn't it, when you think about it? I mean, what a time to get into the market back then. I mean, look at all the money you'd be making now. While supply accelerates faster than the real demand. So what is this? Is this a backlog? It is a backlog. It is the situation where prices in Dubai have been falling, or were falling, since 2015, 2016, all the way through to 2020, 2023. Pre-COVID, they were falling. Why? No one was particularly interested in Dubai. I've been here now for 13 years or so. I saw it. This is why I set up the company that I have now, because I saw that there was a demand, because people needed something else other than long-term rentals for their empty units. Since then, the market has been in general decline, so off-plan launches haven't been anywhere near the level that they are now. Then, of course, COVID happened, everything stopped. Now, of course, the market's picked up. Prices have gone just phenomenal. Look at that, 70% since 2019 they've gone up. And of course, all these developers are now jumping into launch. Now, a developer can't wake up one morning and say, I'm going to launch something tomorrow. They have to go through all that process, design work, purchase of plot, regulations, etc. You're finding now that market catching us up, and this is now what's happening. If you look at 2-3 years ago, there were little launches to what there are now. These developers are now catching up, and they're realizing this market is very hot at the moment. So let's get our developments on and let's sell them and make money. Now, one thing I want to make really clear, and this has actually come up on the last few videos, people saying, oh, Greg, you're saying that there's going to be a crash or there's going to be this. I haven't said that. In 2008, which I was in real estate, so I've been in real estate since 2000, so I'm now 25 years, quarter of a century within real estate. I've done this a long time. I was working in the UK. 2008 was the financial crisis. It was horrendous. For those of you that have been in the real estate world will know this, or anyone that was in the business world or anything like that will remember how bad that was. That didn't catch up into Dubai until 2009. It took around 10 months, give or take, for Dubai to start feeling that. That was a global financial crash. So when I'm talking about what is going on in this market, I'm not saying that you will wake up tomorrow morning and everything would have dropped by 20, 30%. Of course it wouldn't. This is one of these situations where it is happening organically. There is not a shock situation that has happened, whether that's in the West or in the East or wherever. This is purely down to Dubai building a lot of stock and some various other reasons like the population, which we'll talk about later on. So this is something I want to press upon everybody, is that I don't believe, personally, this is now my personal thought, you're going to wake up tomorrow and see prices drop by 20, 30%. They've gradually gone up over 2-3 years. And I think, this is my personal perception, you're going to start seeing that drop down, especially when you look at the data. But that's going to be a gradual process. How much could prices drop year on year? I don't know. Depends how much stock comes in exactly. But that is something that I want to impress, because that's something that has come up time and time again, and that you as an investor, if you're considering to do this, or if you're just listening out of interest, this is something which is going to happen over time. This is the next year, 2 years, 3 years. You're going to start seeing these curves start going down, and I've got a phenomenal graph to show you later to prove that also. Right, so moving on. What is Property Monitor showing? Property Monitor, they're brilliant, by the way. If you ever want any information, use them. A lot, and I mean a lot of companies, whether that's real estate or mortgage companies, banks, whatever, use Property Monitor. Great independent, and I stress that, independent source of information, and they get all their data, the majority of it, or all of it, I believe, from the Dubai Land Department, from the government. So we use them a lot because they're a very credible independent source. What is Property Monitor showing? The sales and the volume. So October 24 versus October 25. Sales volume fell 5.4%, decreasing from 19,402 units to 18,340 transactions, showing reduced buyer activity. Sales value fell 7%, or 7.09% to be specific, decreasing from 50.09 billion to 46.54 billion, signaling a soften in demand. So that's comparing October 25 to October 24. So if we now compare Q2 25 to Q3 25, the last two full quarters, transactions increased by 11.5%. Brilliant. Rising from 49,585 to 55,290. But the total sales value declined 6.2%, falling from 147.54 billion to 138.34 billion. This indicates more lower price sales rather than genuine growth. Again, a figure we'll talk about in a minute, but around 80-85%, I think actually slightly more of units, are studios and one beds that are currently trading at the moment. But we'll get into that detail, that finer detail in a minute. Let's compare Q3 24 to Q3 25. So year on year, quarter. Volume still up 17.2%. 47,181 transactions compared to now 55,290. Value increased by 18.1%. 117.13 billion to 138.34 billion. But this year-on-year rise masks the more recent monthly declines. So what we're saying is here is if you can move further back, look further back into the past, it's going to make the figures look better. As an investor, you look at the here and now and your projection is forward, not back. You never buy at the height of the market. Warren Buffett made a phenomenal comment: when everyone buys, sell, and when everyone sells, buy. We're looking here at data that you're seeing across the market on year-on-year comparisons. Well, of course, because 2 quarters, 3 quarters, 4 quarters ago, there was lots of transactions happening. But if you look at the here and now, which is what you have to do as an investor, things are dropping or starting to drop. So what does that say? Does that say that we've now hit the peak and things are beginning to fall off? Could well be, especially when you look at lots of different things that are happening, whether it's the flipping market, the secondary market, the rental returns market. Because a big thing is here, and I talk to a lot of investors, is okay, you're buying now, that's great. Where's the market in 2 years? When your unit hands over in 2 or 3 years, or even 1 year, where is that market going to be? Because there are roughly 400,000 units under construction due to hand over in the next 3, possibly 4 years. Where's your return? Where's this? It's all very well and good buying now, especially off plan, but where is it when it hands over? And you've got to forecast. And if you're beginning to see signs of a falling market now, where is that in 3 or 4 or 5 years? So you've seen a boom market now. I think it's leveled off. To me personally, I think you're beginning to see a decrease, and you've got to be very careful because that supply is not going to stop. If everyone stopped building now, there are no more launches, and you've still got 400,000 units handing over, that's a really big problem. If there are only 100,000 units coming into the market, you may see a slight dip. But if you're continuously seeing what we're still seeing, I believe, on average, is 10,000 units being launched for off-plan to purchase every month, that's another 120,000 to come into the market. Something you have to consider. Where are these units? Where is the market, I should say, when these units hand over? That's on the off-plan segment, of course, that I'm being quite specific on there, but 70% of transactions are off-plan, which again, when you look at a market at 70% of off-plan, that just shows a market where people are speculating. 70% of sales is on speculation. Concerning. So let's move on. So what other market reports say about sales volumes and value? So sources are Allsopp, prominent real estate agency, Espace, prominent real estate agency, Betterhomes, prominent real estate agency, Cavendish Maxwell, which are surveyors. So Allsopp are saying in their latest report, October 2025 versus October 2024, they report the same as Property Monitor with their sales value. They offered an additional insight, though, that the average sale price in October 2025 fell by 10% month on month. The average sale price in October fell 10% month on month. It's a very short period of time versus September 2025, but remained 23% year on year. So that goes back to my original point that if you can do year on year, if you look at the last 12 months, it does look great. If you compare a year ago, all this sort of stuff. But if you're just doing the month on month, the here and now market, what is happening today, it's in the red. Let's look at Espace. So Espace, they reported that total sales value was down 6% quarter on quarter. So that's Q2 25 versus Q3 25. That's in their report. Betterhomes, they're saying that transactions climbed 11% quarter on quarter to 55,280, but sales value at 138.3 billion, showing a seasonal 6.4% drop. Seasonal? Was that market? And then Cavendish Maxwell, so they're surveyors, great source because they are neutral. These are people that are analysing the market. 3 companies I've just specified before, real estate agencies that are looking to sell stock. So Cavendish Maxwell, very neutral. They're saying they reported Q3 2025 that sales value reached 138 billion, which marked a 6.3% decline quarter on quarter. So that's Q3 versus Q2 2025. So interesting that you have different sources, some saying different things, but there is negative in there. Allsopp's October sales value dropped 7%. Espace sales value dropped 6%. Betterhomes sales value dropped 6.4%. Cavendish Maxwell saying that sales value dropped 6.3%. Four sources. Interesting stuff. So let's move this one on. Areas and property types. So this is from Betterhomes. According to Betterhomes, villa and townhouses value and volume both dropped in Q3. After 5 straight quarters of gains, villa and townhouse value slipped 34% in Q3, something that we spoke about earlier, quoting from that newspaper. So according to Betterhomes, price per square foot hit a record 1,664 dirhams. Brilliant. But we'll discuss that later as to how that impacts the long-term rental yield. So of course, if you're paying more, but your yields are dropping, it's not a good thing, but we'll talk about that in a minute. So let's move on. So let's look at what is the market saying, the resale market. So sources, Property Monitor and Espace. So according to Property Monitor, year on year, Q3 2024 versus Q3 2025, transactions dropped 9.5%. It's a big drop. It's a very, very, very big drop. So that's actually looking year on year quarters. This is what I've always looked at because we've spent the last 9 months comparing year on years. And I've always said this, once you get into Q4 of this year, when the market started feeling the pressure, the year on year is going to be a struggle because you've done that year cycle. So your quarter on quarter, year on year, month on month are all going to start showing negative. You're starting to see that come through. I'm not saying it's here now, but you are already starting to see that. So when we get into Q1, it's going to be very interesting looking at what is actually going on. Yes, there'll be a few things that will go up, but majority, when it sales transactions and things like this, you're going to start seeing a decline. So there you go. Q3 24 versus Q3 25. According to Property Monitor, transactions are down 9.5%. Means the interest is dropping in the market. If interest drops in the market, transactions drop. What does that then mean? What comes next? Sales prices. Not saying sales prices tomorrow morning when you wake up, they've dropped. This is the start of the trigger. Transactions start, prices will start to drop. And we're now seeing that in the last 6 months, give or take. So it's just a matter of time. As I said, you don't wake up one morning, these things just happen. These things happen over time and the signs are clearly there. Quarter on quarter. So let's look at Q2 25 versus Q3 2025. So quarter on quarter of this year, sales transactions are down 19.8%. So year on year quarters are down 9.5 and this year quarter on quarter are down 19.8. It's gathering momentum. This is snowballing. These amounts, these negative percentage are growing and growing and growing. This is only going to grow and this will then hit prices shortly. And my worry is that once, and I've seen this in Dubai, I've been here a while, is that once the market starts understanding and media, they're already reporting it, real estate agents start really coming out with it and saying, yeah, market isn't what it was, everyone will look to sell. So not only have you got the existing property that's for sale, you've now got all this additional property coming into the market for sale that people are saying, oh, right, okay, I better sell because it looks as though the market's now dropping off. Then more people want to sell, and that will just drive prices down. Happens, it's general real estate sense. That's what happens. More supply, not enough demand, prices will go down. And at the moment, there's no demand. If we look at Espace, according to Espace, off-plans accounted for 59% of all residential sales in H1 2025, and that jumped to 70% in Q3 2025, meaning the market strength is heavily skewed towards off-plan launches, not resale. We've just discussed this. So we know that the transactional volume and the value is in resale, not in existing. Now, off-plan is speculative. People are hoping that the values go up. That is a very tough case to base a market on. I'm going to base purchasing on something happening in the future. Let's focus on what is happening now, and that is secondary transactions, and there you go. Year on year drop of 9.5 and quarter on quarter this year a drop of 19.8. We've got to think long and hard about how this is all going to go. So if we then move forward, let's talk about what's the market saying for the resale market. Let's keep on that, shall we? So let's talk about Espace and their report. So interesting this is. So we're looking at the transactional volumes. Let's look at apartments, shall we? So it's all all majorities pointing red. You're going to see this pop up on your screen now, but let's bring up the main ones. Let's bring up where everyone knows and have been here the longest, and there's the safest places, you could argue, to put your money. So according to Espace, apartment resales are down 12% in downtown. They're down 26% in Dubai Marina. They're down 22% on the Palm Jumeirah, all prime areas. But there are a few green arrows, and I know you see them. I see them too, but there's a big but here. According to a Espace report, the apartment resales, which we've just discussed, the Dubai Creek and the JVC, they're both heavily populated though by new launches and handovers. So are these figures seeing huge growths because of all the new handovers that are coming through? Because JBR, there's not much going on there. Dubai Marina, there's not much going on there. So is this skewing the figures? Probably. So just bear that one in mind, that you've got to separate secondary from off-plan to really find what is going on in that market. Let's move on to villas. Villas not great either, so I'll do the same again. Let's pull out the areas that everybody knows. Arabian Ranch is down 17%. Emirates Hills down 74%. 74% Emirates Hills. Palm Jumeirah is down 53%. This is dramatic falls, and that's comparing year-on-year quarters. So half the transactions for the Palm Jumeirah are going through in the last quarter than last year. So that, to me, would suggest that the buyers aren't there to buy, nor wanting to buy, or not wanting to buy at these higher values. So if they're not wanting to buy at these values, what's going to happen to the values? The signs are there. It's all there. Espace in their report. So things we've got to think about. So the outliers that skew the data. So something that we need to dig into, which I just touched on a couple of times. This is from Property Monitor and from Arabian Business. So according to Property Monitor, August 2025, total transactions value hit 42 billion, which made the headlines. Brilliant. Lots of money for the tax man. Lots and lots of money for the government that are going through that transaction. Every time it goes through, you're obviously paying your transfer fees on that. So great to see that value coming up. Great for Dubai, great for the government. All this money, I'm sure, will come back into the economy somehow. I mean, fantastic. So there were 17,699 transactions in total, but one single sale of that was 350 million, which was in Le Maire. According to Property Monitor, September 2025, total value reached 44 billion. Again, one of the sales was 200 million. Again, dig into the data a bit, you begin to see it isn't all what it appears. Large assets, large properties can consume quite a large amount of the total transactional volume. So that's one transaction, but a huge amount of the value, I beg your pardon. So why these outliers matter? These ultra luxury transactions are not reflective of the broader market. In reality, 26.1%, this is in August, and 27.5% in September, so on average 26%, of all transactions were in the 1 to 1.5 million dirham range. Now, roughly 85%, give or take, of what is being built, handed over, or bought are one-bedders. Majority of what is being bought, as in beds, only accounts for 25% of the value. Something you have to think about, because that can skew the figures. That can make someone believe that there's a lot more activity happening than there actually is. So since January 2024, the market has averaged 416 sales above 10 million a month consistently, which can distort the monthly figures. Something to just bear in mind. These high value assets contribute hugely to this magnificent figure of what actually is going through. And bear in mind, I wish I could afford something for 300 million. I must say that. Majority of us can't. The majority of us are at a far lower level, or that's where the investors are, or that's where, you know, people's affordability lies. You've got to focus on what majority is, not what the singular is. So these singular phenomenal sales that are going through, you know, we've got to make sure that they're not having too much of the attention, that we are looking at the core market. Let's move on. What is the market saying on the rental side? So Gulf News, The National, What's On Dubai, and Property Monitor. The rental headlines: cooling demand and easing prices. So this is now coming out in the publications. So not something that we've seen for many, many years, but more publications are coming out to say things are changing. So according to the Gulf News, tenants now have more choice and less pressure. New supply is creating healthy competition among landlords. Rental increases are slowing across most communities. The National, they came out, rental prices are beginning to ease across key areas. Growth in rentals has flattened after years of steep rises. Landlords in oversupplied, beg your pardon, areas are now offering incentives to secure tenants. We've heard about this. You can have a 13-month contract for the price of 12, this sort of stuff. Some people even putting in your DWA, so you don't pay for DWA, that's all included. So according to what's on, rent prices in Dubai are dropping for the first time in years. Certain apartment clusters seeing noticeable reductions, and market stabilization is becoming more widespread. And then according to Property Monitor, rental contract volumes showing softening demand. New versus renewal split indicates renewals rising faster than new leases. So tenant stickiness due to affordability. So what we're finding, or what we're seeing a lot of, is tenants saying, okay, you want, keep numbers simple, 100,000 dirhams, which is what I've been paying. Well, there's one next door, or there's one 3-4 floors below, and they're going to take 85. So I'm going to move out and find, or move into that property. Something you have to bear in mind with this population increase that's going on, you're seeing a churn of new transactions because existing population are now leaving what they're already in to find better deals. Something we have to focus on. Again, that's what the Big Short's about. The headlines look great, you know, and it's great to see some of the sums that are going through. But when you start looking into this, you start finding that the situation is as clear as what one thought. So rental defaults are increasing in line with income pressure and the cost of living, something we'll talk about in a minute. So there's some articles from the market in general. So things to watch out for. Right, so let's go to more about what the market is saying on the rental side. So sources are Allsopp Allsopp, DXB and Property Monitor. So more from the market. According to Allsopp's October 2025 report, the rental market saw a cooling in volumes. New contracts down 6% month on month, October 25 versus September 25. So in 1 month, rental contracts have dropped 6%. Renewals are down 15% month on month, October 25 versus September 25. So just like what I've said, I'm not saying that's all of the market, but what you're now seeing, and that would suggest it, renewals are down because people are now vacating. Now they could be leaving Dubai, or it's the fact that they're now vacating to go and find something that's cheaper. But if renewals are dropping 15% and new contracts are down 6%, again, we're talking about this population increase, which I talked a lot about in the previous Big Short episode. So please go back if you haven't seen it and have a look at that. Again, I made it very clear. I'm sure the stat is correct, but what we don't know, and would be great to know, is who's moving here. Is it people, multimillionaires, and drive Rolls Royces and they're coming to do this and this? Or is it people that are coming in to work on the building sites or coming in hospitality and staff accommodation? I did bring up a point, and funnily enough, I only met this gentleman 2 weeks ago. He lived in Dubai, he's left Dubai, he still has his visas here, still has his bank account here. He flies in every second year to renew his visa, and he's got him and his family on that, but they don't live here. But that, of course, gets counted within the population. So there's always these different situations within Dubai that people can come and go very often. Multiple clients I had, some of them billionaires, they were barely in Dubai 4 weeks a year, but they would be counted as part of that population. So something to bear in mind. So according to DXB, I always say this, but they're really, really impressive. I've now officially met Rakesh, which is great, who's a CEO. I do know a bit more about their products, so I'm going to do them a little bit of a favour here, but you need to get in touch with them if you're a landlord. They will insure your rent. So if there's any defaults or anything like that, given everything I'm talking about and given what this market's probably going into, call them. You need to speak to them. They are working with some of the biggest firms, biggest families, biggest whatever in Dubai at the moment. They have a huge amount of units on their books, which just demonstrates how much people are taking this seriously. So go and have a chat with them. And DXB, you can thank me later. So according to DXB, so Rakesh, I should say, you can thank me later, but 45,000 rental disputes were filed in Q2 2025. The number one reason was non-payment of rent. So this was a post that actually Rakesh put up, and he said that he was going on to the Dubai Eye. I'll just read it, his post. And the guest before me was a senior judge at the Rental Dispute Committee. He stated live that the Rental Dispute Centre handled 45,000 cases during Q2 2025, and the number one reason was non-payment. So that's from one of the judges, so a good source. So the total rental contracts for Q2 2025 is 130,000. 35,000 is 35% of the total rental contracts. So that's a lot. That's a big percentage. So if we say majority of that is due to defaults, again, I talked about this in my last video, but redundancies is now becoming a thing. AI is becoming a thing. We're going to talk about the job market in a minute. We're hearing or seeing that there are people that are sadly defaulting, can't afford the rent. Now, this is where DXB step in and can help landlords with an assurance against that. But this is a key driver for this market in its percentages that are dropping. You know, renewals, new contracts, people can't afford to be in Dubai. We know that cost of living's gone up, rent's gone up. You know, taxation. You know, you're looking at some of the highest tax rises in the West or any Western country. Yes, it's not the highest tax amount from the sense of rises, 9% corporation, 5% VAT. The West aren't rising it like that. But again, a lot less than the full amount of the Western world. I just want to be clear on that. But Dubai is changing. And of course, with cost of living going up, a lot more people coming into Dubai means there's a lot more competition for jobs, which means people are willing to accept less salaries, but they can't afford to live here. I know friends, sadly, that have left Dubai for these reasons, and we're seeing more of it. Now, when you start looking at the data, you can then get a better understanding of what's going on. So it goes on to say here that there's a major warning sign for anyone considering long-term rentals. So you just got to think about what can happen. Goes on to what I was saying earlier. Don't focus on today. As an investor, you don't focus on today, you focus on the future, 9, 12 months plus. Don't look even at the next 6 months. You've got to consider what is on the horizon and start navigating. So according to Property Monitor contract trends, so Jan 2025 versus October 2025, total contracts down 9.38%. New contracts are up 13.85. Renewals are down 20.88. So that's Jan 2025 versus October. So it's beginning of the year versus now. So it's nice that the new contracts have gone up, but renewals have plummeted by 20.88%. So you can put the two together, that's a drop of 9.38% contracts. So let's look at Q2 2025 versus Q1 2025. Total is down 14.69. So new contracts are down 10.65%. Renewals are down 16.82%. Let's look at Q3 25 versus Q2 2025. So all up. So total is 17.68, new is up 21.84, and renewals are up 15.22. So Q3 versus Q2 is all up. Q2 versus Q1 is all down. And then if we look at the beginning of the year versus this year, the beginning of the year, so month one versus this month, it's all down. Mixed. Interesting to see what's going on with that. I mean, as we know, Q3 versus Q2 is up. So that was actually over the summer period. So that makes for interesting reading. But as we know, a lot of people, if you're going to move to Dubai, schools coming back, parents coming back for schooling, they all tend to move back July, August, September. If you look at the last few years, those 3 months, you've always seen a rise in transactions for that reason. Then October, you start to see it drop. And now you're beginning to see it drop. So what you're seeing is the same pattern, but the numbers are bigger, meaning worse. A key point we must highlight, despite Dubai's population rising 5.4%, according to Dubai Population Clock, from October 24 to October 2025, total sales volume fell 5.4% in the same period, according to Property Monitor, and rental contracts fell even more, down 8.02%, October 24 versus October 25. Goes on to the point I was just saying before about population. If the population is growing, then why aren't more transactions happening, and why aren't more rental transactions happening? Now, what I've seen so many times, and it drives me nuts from these brokers, is that they're putting transaction volumes are up because people are moving here. They're not telling you, one line down, that 70% of those transactions are off plan and it's an empty plot with sand or air. Right? So if all these people are moving here, what are they doing? Camping on that site? I don't understand it. You've got to look at the property that exists now that you can physically touch. It's all dropping. Rental transactions are dropping, secondary sales are dropping. So yes, I'm sure the population is going up, not disputing that. It's who is coming in, because clearly they're not moving into the areas. And then, again, I talked about it in my previous video, we're looking at areas from Jumeirah Gulf Estates, Arabian Ranches, sports cities, motor cities, JVCs, Palm Jumeirahs, downtown, Business Bay. I call it or reference it as the new Dubai. So since 2000, property became freehold. That's when the new Dubai, and Dubai obviously kicked off. Those are the areas we're talking about now. Those are the areas that these figures, majority of it is all based off. So if sales transactions are dropping, rentals are dropping, the population is increasing, which I'm sure it is, but I think you'll find the demographic of those people that are coming in here have probably got staff accommodation or something like that, because they're not renting and they're not buying. Something to think about. Is scary stuff, isn't it? Very, very scary stuff. Now, this is a graph. This is a graph that we found on Property Monitor, which is pretty hard hitting. So this is telling you what the revenues or returns are doing, and we took this all the way back to pre-COVID levels, so it gives you a real good idea of what was what. Now, as I said at the beginning of this show, is that the market had been dropping in general from around 2015 onwards. Now, if you look at the graph, you can actually see that that's beginning to drop. Falls, crashes out right into COVID. It then rebounds right through to 2023. Coming up to 2024, where we've put that red line, is around where each one of those lines peaks. And since that, everything has been dropping. So this is the percentage change from April 24 to October 25. You're talking about apartments dropping 10.9%, villas dropping 8.7%. So there are some phenomenal drops there. And these are this is based on your returns. These are your returns. So returns in Dubai on average there, just skimming across it, are probably dropping around 7-8% since April 2024. So we're looking at almost 16-17 months. You've seen a pretty large decline on the level of return that you can achieve. And that's from Property Monitor. So that is concerning, very, very, very concerning. In fact, all the data is there, guys. Like I said at the beginning of this video, it's all there. And that's the point of the show, is just to put it all together. It's not to be detrimental, because I'm not being detrimental. I've lived in Dubai for 13 years. I own property in Dubai. In fact, I still own. That's something I should probably say, because I'm not being biased here or anything like that. But all the data is there, and you start compounding this, or you don't have to look too far to find this. So your returns are now dropping. And does that surprise us? Of course it doesn't, because transactions are dropping. Transactions drop, values drop. So there you go. Your average return now for your properties are dropping. So let's move on. Okay, so let's look at launches and handovers. So Allsopp, Bugatti, Savills, Reading, Cavendish Maxwell, Rose and Betterhomes. So you'll be seeing these slides popping up with all this wonderful information. But let's just look at what Allsopp's saying. So developers are launching projects at an unprecedented rate. A widening gap is forming between announced launches and actual completions. Heavy focus on apartments equals potential future oversupply in high density areas. And then they go on to say that villa townhouses may face a worsening shortage as developers prioritise apartment and towers. Contradicts what Betterhomes are saying, which they're saying that the transactions are dropping and heavily. So one to watch out for there. Let's get into this one. So Rosa, they've said 7,800 units were delivered in Q3 2025, 14,900 more expected in Q4. Total 2025 handovers would then be 44,000, the highest in 5 years, although it was meant to be 74,000. Quarter on quarter handovers jumped 100%. And will stay elevated through 2026 due to the backlog. Cavendish Maxwell, they go on to say 9,400 units completed in Q3 2025, which is 41.3% materialised rate. 28,100 units delivered in the first 9 months of 2025. That's 6% year on year. Deliveries concentrated in JVC, Meydan, Business Bay, Dubai Hills, Talala Gas. Right, and then according to Betterhomes, 28,500 units were delivered year to date 2025, 52,000 more coming by early 2026, 200,000 scheduled by 2027. Let's look at it, shall we? So 74,000 meant to hand over this year, about 44,000 have handed over. That means 30-odd thousand are going to roll over to next year. Next year, I believe it was meant to be around 100, 120. So that could be anywhere between 100 and 150,000 that are meant to hand over. There is an amount, I see skewed figures, but anywhere between 380 to 430,000 units are currently under construction. So let's go in the middle, call it 400,000. So 400,000 units due to be coming into the market as of today or last week. Bear in mind, there's 9 to 10,000 new properties being launched every month. So bear in mind, this is always going. What do I think on that? I think you're already seeing it. So the quarter amount of properties that are handing over is growing. So Q4 versus Q3 is doubled. I think that growth will continue each quarter. So when you go into Q1, they're 2026, they're suggesting here it will be around 14,900 in Q4. So you might find when you get into Q1 of 2026, that could be 25,000, could be 30,000. Then the quarter after, that could jump up and jump up because you've got all this backlog as well as all this stock already being built, which is growing like a snowball. So each quarter will naturally see a growth. So if you've got all that stock handing over, which I think we'd all agree, vast majority of it is investor bought, which means they're either going to sell, which puts more stock into the market, which could have an effect on prices, or they're going to look to rent, put it in the market, which can have more of an effect on prices. So, and that is a continuous flow. And I think this is going to be a continuous gain every quarter of more handovers. So more stock coming into this market, so more pressure. Let's look at the macroeconomic factors. So sources: Arabian Business, LinkedIn Insights, and the National. According to the National, UAE employees are facing salary contraction. Competition from new residents is rising, pushing wages down. Income pressure is reducing tenant affordability, contributing to defaults. You can see that article and how everything we've now just discussed is aligned with that. And look, if more people coming to Dubai hunting for jobs, that's just going to put more pressure on salaries. And this is just, again, a snowball effect. Let's see what happens. But as I said, I know a few people have now left Dubai. There are an amount, obviously those figures aren't published, but there's an amount that are leaving because they're just finding that Dubai is too expensive for them or they can't find work. And of course, AI is contributing hugely to that. I mean, we've seen globally some of the largest names out there, even Amazon's, the redundancies are huge amounts. Phenomenal amounts. So, and that I believe will only grow. Again, that's a global situation, but that's another thing that we've really got to look at is a global situation, the economy and what's going on there. So you look at the American stock market is an AI bubble at the moment. You look at the housing market over there, interesting times. And as we all know, with America, they are the driving force, just like 2008. Something happens there, doesn't matter where you are in the world, you're going to feel it. So with Dubai, it felt it back in 2009, that's for sure. So let's move on with this. So according to Arabian Business, fewer UAE professionals are negotiating salaries. That's because they know there's competition. Global competition is increasing, putting downward pressure on earnings. Lower salaries equals lower rental tolerance, specifically in mid-market apartments. That is Arabian Business. So again, that's just saying the same as the National. There's more people competing for job, which means the salaries drop, which means they can't afford their rent. The market commentary is Dubai real estate, rising rents, flat wages, and risk of ROI adjustment, which means that landlords will have to drop their rents to accommodate the budgets of what is now their tenant or population of the tenants. Wages are flat or declining while living costs continue to rise. This creates a gap between what landlords expect and what tenants are actually willing to pay. It just goes hand in hand with everything we've just discussed, with transactions and returns that are now dropping. Everything, it's all there. It's all there. So why does this matter? It matters. Falling or flat wages equals reduced rental demand. Reduced rental demand equals higher defaults. Higher defaults equals landlords under pressure. This links directly to the cooling rental market that we've spoken about earlier. Eyes wide open, people. Eyes wide open. Market is changing. Each time I do one of these, there's new facts and figures. There's new angles we can look at. And again, look at Dubai. The value is soaring and it's the best quarter that they've ever had. But when you get stuck into that detail or you start thinking more methodically with it, if it's being driven by speculators, investors that don't own the product, it's not tangible, you can't touch it, 70% of the market here now today is driven by that mindset. As I've said in the beginning part of this video, what happens when it all hands over? Where's the market when that all hands over? If the market is showing signs like it is already with falling rental transactions, falling rental returns, falling sales transactions, areas which are arguably the most expensive in Dubai, or some of the most popular, Dubai Marina, Palm Jumeirah, are already seeing declines as well. Package this up, what's it telling you? You know, I'm not here to tell people what to do or not to do. Buy property, why not? You're going to be here for 10, 20 years. You're going to see multiple cycles. But it's just to get a different angle on the information that's coming out, break those headlines down. It doesn't take much to break them down to say, actually, the market is being driven by this segment and this segment only. From my perspective, my worry lies with secondary. It seems those secondaries had its day. It's reached its max. People aren't willing to pay it anymore. It's beginning to drop. And now everyone's now gone, well, where else can we go? Okay, let's all jump into off plan because I'm being told when I come to sell it in 3 years, I'm going to make 20%, or I can flip it now for 20%, which you can't do anymore because there's too much stock. You've got to know what you're doing. Just know what you're doing and look at what you're trying to achieve. And is it achievable? Look at the economic factors around you. Look at the general factors around you. You know, where is this market by the time that unit hands to you? Or where is this market, this Dubai market, even in 6 months? Everything seems to be, or majority seems to be in the red. One must be cautious, as they say. So look, I think I'm going to end it on that. There's a quick roundup, a lot of information. I've got a lot of slides in front of me, which you saw me reading off. I think it's the most we've ever had before, because there's that much information coming through. There's that much awareness that we need to have. So look, please like, subscribe to the channel. We want to gather some momentum here. 1.2 million hits is not a mean feat. So I'm glad, and a big thank you to the team for getting us there. Write your comments below. Remember, I'm impartial. I'm just taking information from different sources, putting it in. That's it. You know, as I said, I actually have owned, but I've sold a lot of what I have. I've actually only got 1 unit left, which I'm trying to sell because of everything that I read to you on a monthly basis. But you know, my skin is in the game as well. So I'm not biased here. I'm purely here to say this is out there. 2 sides to every story, isn't there? So look, thank you so much. And look, I look forward to doing the next one in the new year, 2026. Can you believe it? So look, have a wonderful day. And thank you so much for your time. Bye-bye.